All right, so we're going to have a discussion with Paul Cerro. Is that the right pronunciation?
Yes, that is how you
Cerro.
should be pronouncing it. Yeah.
My name is Michael Fritzell. I'm writing a Substack, now a newsletter called Asian Century Stocks, focusing on Asian value stocks. And Paul here is another writer and a hedge fund manager. And I will let you introduce yourself.
Yeah. So, hi everybody. My name is Paul Cerro. I am the founder and CIO of Cedar Grove Capital Management, and I'm sure we're going to be diving into it. But just so everybody knows, it did originate from just writing on Substack years ago. Um, similar to Michael here, who got his start with Substack and writing for Asian Century Stocks. We are both native to writing, and then it just for myself, it just morphed into running an SMA fund. So we'll be very excited to dive into all things writing and stuff like that very shortly.
Cool. So you're managing money for individual investors using separately managed accounts. How did you get
Yeah,
into that? You started writing first, and then were you asked by then people to manage money for them, or how did it progress?
yeah. Actually, I should probably give you some context because I don't know if I ever told you, but the whole reason why I started writing. So my background, I started off my career in investment banking at Merrill Lynch in New York, and uh, after I left, I was just bouncing around different tech jobs, and I always like longed for, I guess the intensity of finance, but without the demands of finance, because investment banking like wiped me out. It was so bad. Um, so what ended up happening
Which
was
year? Which year were you at Merrill Lynch? Just curious. I was there
I was
summer of 2006 in the UK, in
oh
Georgia.
you were pre GFC. Oh no. I was 2018 is technically when I started with Merrill Lynch. Um, so that was, I mean, I started in August. Well, I mean, I hit the desk August of 2018, and then we all know what happened like 3 months later. So it was not the best, but that's okay. It wasn't GFC level type stuff. Um, but so what ended up happening was I actually tried to get back into finance. I was trying to like get talk to recruiters because that's how it works here. You just talk to headhunters, and headhunters like help place you in different funds or whatever. And none of them helped me, but but I did get far in point 72. And what ended up happening was I pitched them a stock, which was me shorting Chewy, the pet company. And this was in 2021. And long story short, I did not get the job. but I was like, no, this is a compelling idea. Like somebody's going to want to read this. So that's when I actually started a Substack, and I just copy and pasted my thesis into a Substack post, uh, uh, put it on Twitter, with the hashtag, and I was like, okay, cool. Now people will read it. And spoiler alert, like 5 people read it. But that was actually like the dawn of me writing research, was because I got rejected from point 72, and I just felt like somebody's going to want to know a different perspective. And I just heard about Substack. It was free. It wasn't going to cost me anything. And that's how I got started writing. And then you fast forward 5 years now, and here we are.
Cool. What was the pitch like? Just like a few sentences on what happened to the stock, Chewy.
So it's actually funny. And also, I have no ill will to point 72. I mean, like maybe if I wasn't ready back then, that's fine. I get it. But initially, when I first submitted my thesis, it was actually going long Chewy because my friend was like, just pitch something long. It's like safe to go long as long as you can back it up. So I actually pitched Chewy as a long, and I didn't hear back. So there was another opening. They do like a rolling class, and there's another opening, and this time I flipped it. I was like, you know what? Screw it. Short Chewy. And that's when I got the call back. And she explained, she was like asking me, she's like, the pet industry is so big right now. Why are you short? Why would you short Chewy? And I was explaining to her, like, listen, there's a lot of like pet adoption that's been going on. There's a massive pull forward from COVID. There's going to be negative ramifications because people are going to go back to work. If they're going back to work, how are they going to take care of their animals? Probably going to ditch them off to their parents, or you know, or like leave them for shelters or whatever, or whatever. Basically, there's just so much demand, and it's not going to continue going forward anymore. And that's exactly what happened. There was the growth was not sustainable. People's love for dogs quickly dissipated, or animals, I should say, quickly dissipated once they had to accept reality that the COVID reality was a very short-term reality. And then, of course, the stock, I pitched it when the stock was at $84 a share, and I think it bottomed out at like 14 bucks.
Hmm.
So it was a successful trade. I guess I wasn't that compelling when I was talking to her about it, the interviewer. But yeah, no, it worked out. So that was my first foray into equity writing, and luckily it ended up being a right call.
Interesting. And so that's a short idea, and I've seen you write about other ideas, other short cases as well. Is that something that you're drawn towards in your
Well, that's the
research?
thing. So maybe your experience is different. So if it's different, let me know. I'm very curious to hear about it because you and I started on Substack, but before Substack, I tried to start on Seeking Alpha, and every time I submitted something on Seeking Alpha, they were like, "It's not good enough. It's not good enough." Like because you needed to follow a certain format that Seeking Alpha wanted you to write in, and I'm like, "Well, that's stupid. I don't want to do that." Like the whole point of me writing is so that I don't have to abide by rules. So that's doesn't make any sense. Um,
Exactly.
so that's why I published on Substack. But when it comes to writing, so and we're going to talk about this later because I think it's kind of why you settled on Asian century stocks. But I knew that there were like a million people covering like Apple or Microsoft or like all the big guys. So it's like if I wanted to do this, how would I stand out? And it definitely wasn't being the 1 millionth and one person covering Apple with like no objective um, opinion or perspective. So what I liked doing was I liked going long things. So I did pitch long ideas, but what you mentioned, I liked going short things. The reason why I liked going short things is because it's hard. Shorting is very, very hard. No matter what somebody tells you, it is hard. And you have to be like right. It's not, you don't have, time is really not on your side because it can go against you in a day. Um, Whereas if you're a
You also
long term
get
investor,
you also get like all of this negative feedback. If you're
oh
short
yeah, everybody
something,
hates you. Everybody hates you. Like,
exactly, and
it's like,
because
and the thing is,
they're not going to come around to it. No.
no, and the thing is, like, you could have the most solid case in the world, and people are just like, you're fear mongering, or you don't have this right, you don't understand, or you're putting out this biased post because you're short the stock, and that's why you need to like validate it. I'm like, all right, dude, like whatever. It's like it's the same thing if somebody's long, they're like, yeah, buy the stock. It's the same shit. Um, but the reason I like shorting is because A, not many people do it, and the people who do it, not all of them are successful. It's very hard, like I mentioned. So if you can stand out with short research, you really stand out. Because I've known plenty of people who have thankfully met through my short reports that they were long the stock and then they read it and they're like, I didn't even know that was a thing, and it changed their mind on things. I don't know, like some of them exit their positions completely, some degross, whatever. But because of that added perspective on the opposite side, it actually helped other people. So you kind of gain like a reputation that way. So it was always for me to stand out amongst like the plethora of people who are writing, but then also staying true to myself. And I just love uncovering, as much as I love uncovering a diamond in the rough, I also love uncovering bullshit. And I just happen to be really good at it. So, yeah, a lot of the shorts that I've actually had have been successful, knock on wood, so far. But yeah, it's just another part of my journey, at least in investing and in writing, where you get to stand out, and when you really hit it, you hit it
Mhm.
not only just like big in the sense of like returns, but also in the sense of like reputation, which then compounds if you keep doing it. But there's obviously a risk associated with that.
It creates drama probably on social media, which might be a good thing. I know that some writers who write short research, Elvin Dorsey, most
Yeah,
probably,
yeah.
he would get cited in media on Bloomberg and so on, and that probably brings in traffic. It's
Oh
less
yeah.
exciting to just go out and say that this product is great and this is a long-term compounder at 14 times
Yeah,
PE.
because like nobody cares. Like I remember when is I think it was Bill Ackman, and he was like in 2022, I think, and or 2023, and he was like, yeah, we're long Domino's pizza, and then like the stock goes up like 10%, and it's like, oh, okay, cool. Like, what do you know that we don't know, right? But at the same time, it's also Bill Ackman. He carries weight, and if he says he's in something, it's gonna move the stock, right? He's done the same thing like two times over right now with like Fannie Mae, Freddie Mac. Um, but when you're short something, yes, it grabs a lot of publicity. So like Edwin has done really well, especially during the SPAC days. I mean, he was like writing a report every day about like this one's crap, this one's crap, this one's crap. It was just like you could just like scoop up all like the shit that was out there on the market, and he was writing about it, and most of them went pretty badly. Um, but yeah, you're a contrarian, and we can definitely talk about that later too. But going against the grain is not well loved amongst investors, but to those who appreciate it, can be worth a lot of money to them, and then consequently to the writer as well.
Yeah, I gotta say as well. I mean, I've been on the buy side for many years, and I'm naturally contrarian, and I feel like I don't fit into traditional asset management firm or fund managers because if you're questioning things too much, people get a little bit annoyed. Whereas on Substack, if you're writing a newsletter, you can pretty much say what you want, and if people want to unsubscribe, that's okay with me. So honestly, I feel like I can be more open with what I think now compared to 10 years ago.
Well, because what were you in Merrill Lynch? Like, what were you doing?
No, I was there for one summer. So I was
Oh,
after that I was in corporate finance for a few years in London, and then from
okay,
2010 I was in Asia on the buy side working for emerging market fund.
okay, okay,
So I spent 4 years in China, uh, mostly working for a fund, investing in Hong Kong equities and A shares and also Pan Asian stocks. Came to Singapore for a family office, and I've been having a few different positions since then on the buy side. Um, but it's only now what I feel like I'm really truly enjoying what I do. When I was on the buy side, I was often forced to cover stocks that I didn't wasn't interested in, and I thought perhaps were
mm,
overvalued or had issues. Just like you said, like I don't want to be the 100th analyst covering Alibaba. It just adds no
yeah,
value.
yeah, and it's interesting you say that too because I don't know, I don't know if you had the same experience on the buy side. On the sell side, it's almost like they take you as a sheet of paper and they want you to stay within that sheet of paper. Like, this is how we do things. This is the order with how we do it. This is how this is supposed to look and that is supposed to look and how you're supposed to write this and how you're supposed to write that. And like, I, I admire rules, but I've never been like, it's gonna sound bad because it's gonna come off weird. I'm not like a rule person in the sense that like I appreciate structure, but I hate being held to that structure to a T. Like you have like no creative thought, right? If you're only supposed to do it this way every single time, blah blah blah. So like even when you read like research reports, right, from sell side, it's pretty structured. It's like the same thing over and over again. It's just different content. And I hated that. Like even my notebooks don't even have lines in them because I hate staying within lines because it just kind of like brings me back to like childhood where they tell you like color in the lines, you can't go out of the lines, and I'm like, well, what if I want to go out of the lines, you know? So that's why when it comes to writing, like you just said, it's great because when you're writing on your own, you can do whatever you want, however you want it. You could even curse in it. Like if you've read some of mine, like I even curse in mine. And the best part of that, one of the best feedback that I've gotten from people is they're like, I know you write it. I know you're the one who writes this because I can already hear you as I'm reading your post because it's basically you, but just in text.
That's funny. Yeah, exactly. I think that's becoming increasingly the case when you're writing. You become a person that they trust, and it becomes less about the research and more about your voice. Like people want to hear your
Yeah,
voice. So you kind of have to lean into that, I think.
Oh,
It's
definitely. Because I mean, I imagine that like your subscribers, I imagine that they like the way that you portray information and deliver information, and like your little like I like to say niche because I mean it is niche, but I'm saying in the sense of that like your little spin on things is unique to. If I read this, like Mike Fritzl is the person who has this type of spin to it, right? And I don't think anybody else is going to try to copy that.
no,
Hopefully, at least
that's
hopefully
right.
not.
And people know that it's not written by AI because I have this broken English. Like they know it's written by me. So it's
It's funny you say that because
it's
I had a conversation with somebody and they're like, they're just like, yeah, piggybacking off of what they told me, like I can tell that it's you because it sounds like you when you're writing, and I'm like, yeah. You want to know why it's also me? Because there's probably like 100 or 200 grammatical errors that like AI would have caught if it wrote it. Because like English is my worst subject ever. So there are just there's probably tons of like grammatical errors and spelling errors that AI would catch on, but like I don't because I'm just like trying to write as fast as I
no, but
can.
that's like if something gets commoditized, the value drops as well. You know, anything like a commodity, it will lose in value if it just gets if there's an oversupply. And the same thing with AI content. So
Oh, yeah,
we
it's not
definitely
unique. I mean,
need to have our own voice and show our face. I think that's important.
well, because anybody, I know you've done a lot of prompting yourself when it comes to getting up to speed on equities, but it's like, especially when you're writing, I'm sure you've come across this too. If you've probably read certain people's articles and you're just like, wow, is this AI? Like, there is not a human factor in this thing at all, and it's just like spewing out like just bullshit. And of course, like the giveaway, like all the EM dashes like everywhere. Um, but it's interesting because if you mentioned trust, which I think is very important, um, because when you take away, I guess it's gonna sound so cheesy, but if you take away like the soul or passion of your work, like as you're either writing it, which translates into somebody being able to read and like get a sense of that feeling of something you just wrote about, um, then people, like you said, it becomes highly commoditized. They get bored. They might unsubscribe. They might churn. They might be like, oh, Michael's a sellout. I guess it's clearly AI. Like he's not even trying anymore, right? Um, so it's that factor that I think plays into a role, especially when it comes to like newsletter retention and also conversion. If people understand that, like, hey, it's Michael writing this or it's Paul writing this, it's not Michael using AI to write this, Paul using AI to write this, right? Because if it's just a prompt, I can do that myself. Like I don't need that.
Yeah, I mean, our job is to curate information and deliver it to not waste people's times. And
Yes.
AI tools, I mean, they're really good at bullshitting, but sometimes
Yeah.
not not frequently enough.
Yeah, I mean, because I mean, there's some people who have had Twitter bouts with, and they're like, there'll be like something come out, there'll be like earnings, like let's just say earnings came out this afternoon, and then the next morning they're like, yeah, I just published a 10,000 word piece on the earnings update. I'm like, number one, what earnings update requires you to write 10,000 words to describe what just happened? And then number two, you could write through the night after that phone call to publish in the morning. I don't know how you're getting to 10,000 words based succinctly within less than 12 hours. Like, shut up. So it's just like things like that where it's just like blatant laziness, I guess. Because then again, you get something out, it makes you seem like you're writing a lot, but in reality, you're just feeding, like you said, it's just BS, and then it's unhelpful to anybody because it's BS. It's just filler. It's just filler words. Like nothing's really useful out of it.
Yeah, that's right. I mean, it's. I want to ask you about how you're dealing with this bull market in the U.S. I mean, for me myself, like I'm covering stocks that are really out of the radar of most investors, and I'm
Hmm.
kind of insistent on just looking at where the value is. But for you, it's going to be more difficult because other stocks are quite expensive, right? So
Oh
how
my
do you choose what to
god.
invest?
So this is hopefully this will be helpful to anybody reading this, and let me know if you change. Because like I know you said you were on buy side in Hong Kong equities, and your sphere of influence just happened to be in Asia, so you kind of just it sounds like you just kept rolling with that, right? That
That's right.
Asian coverage.
Yeah,
Okay, yeah, so that makes sense. So to back up a little bit, when it came to writing, like we agreed on, I don't need to be the millionth and one person covering Apple. Like no one's gonna care. But I also knew that if I was doing this writing outside of my core job at the time, I didn't want it to be a job, in the sense that I hated it. So what I did from the beginning, which I did, I guess, innocently at the time, but it paid off later on, is that I only wanted to write about things that I wanted to write about. So like when I first started out, a lot of it was like cannabis. Cannabis got screwed because of policy and everything like that. But being able to write about things that I wanted to write about or I wanted to invest in would naturally mean that I would grow slower because that's not like a niche, right? Like I don't cover Asian stocks. I cover a bunch of things because I just think I'm just interested in it. So I actually, one, I prolonged my longevity by doing this, by just doing what I wanted to do. And if anybody else wanted to come along for the ride, great, come along for the ride. But nowadays, obviously, since you run money, or since I run money, it's different. But it's along the same principles. It's like if I'm investing in certain names and I find it compelling, I'll write up a report saying, hey, we own XYZ. Well, actually, I can't say XYZ. It's actually a stock. We own ABC, and this is why, right? Or we're short, 1, 2, 3 because whatever. And it's interesting to me, and the reason why I write it is so that only I can get my thoughts down on paper. So maybe where I can figure out like succinctly like what the thesis actually is, where I'm light, where I'm too heavy, and then share it out. And then if anybody else wants to benefit from it, great. This year is a little bit difficult since everything is AI related, and if you're not invested in AI, there's a ton of opportunities out there, but like nobody cares about them right now because everything is all like so many flows are just going to AI that
hmm
like I sent it out in a quick uh, post the other day. I'm like, it's just sucking the oxygen out of the room for everything. Um, so like any pop that you see, it really doesn't even last that long because then it's going to get sold off and then put back into AI. So I have to remind myself and to other people like, listen, I'm not a trader. I'm not trying to get in and out on a daily basis, on a weekly basis, on a monthly basis. I'm supposed to be judged for years out because that's just what my style is. So when it comes to other people making a lot of money in this bull market for AI, congratulations. I'm happy for you. I do not have an edge there. I have an edge in other places, which is why LPs have given me money. Um, but it's just difficult because you have to balance out finding new opportunities that you think can make money, but the market's not going to give it any credit right now, and putting that into words on a piece of paper to explain kind of like why you're taking that risk right now, as opposed to the obvious like investing in MU on gross leverage and seeing it moon like 20% every day, apparently. If that's a long-winded way to answer your question.
Yeah, no, I can see that. I mean, I was in Omaha a few weeks ago, and I felt like every discussion was about AI, which is interesting because if I talk to people here in Singapore over lunch, not much of the discussion will be about AI. We'll talk about value stocks for the most part. So it's
And
a
that's
different niche for
interesting.
sure.
Yeah,
But
I mean,
interesting.
so it sounds like in your area, I mean, it's not like AI is a secret, but it
Yeah.
sounds like in your area,
Well,
there's still a desire to own like valuable companies that have nothing to do with that space.
that's partly because Singapore is right in the middle of Southeast Asia, and these countries are emerging markets for the most part, and there aren't that many investable stocks. There's no AI complex in Southeast Asia. There are stocks like that in East Asia, like Korea, Taiwan, but
Korea, yeah, Korea. I've seen the I've seen the indices in Korea just go up and to the right.
It's been it's been a two-tiered market in Asia. You either have Korea, Taiwan that's really rallying, and the rest is just dead right now. So there's no excitement about the kind of research I do. I can sense that. I mean, I've moved my publication away from Substack, and that could also explain some of the tepid interest in it, perhaps. But yeah, it is it's become extreme in terms of the bifurcation of the market.
Well, that's the thing. What happens is because this happened in like 2021, right? When you get like when it's so easy to make money, people just kind of gravitate towards what's the next post from the next person that basically says that the upside here is massive. Like how can I pay for that perspective um, or that trade idea so that I can like 2x, 3x, 10x my money very quickly because that's where it's at, right? And I think that's what's happening now in AI. That because there's so much money to be made in AI, everyone's just like chasing the next thing that they possibly can get into. But then they're also like leaving behind all the other stuff that actually has value as well, but that nobody cares about. Um, so it's in times of euphoria, I'll say, is that when people kind of abandon the principles of other ideas or strategies in favor of like what's hot right now. So I imagine like financial writers, of course myself too, like we go through ebbs and flows um, from our like subscriber base, but eventually they come back and they're like, okay, I had my fun in AI, or I had my fun in SPACs, or I had my fun in quantum, and now we're coming back to reality, and this is where I should be investing in because I'm not going to get my face ripped off.
From your perspective, how does this compare to 2021, the SPAC bubble, and you know,
Oh, I think it's very different. It's like night and day. Because like the SPAC bubble was like all fake. I mean, it was companies that were going public on fake projections, 5 years into the future, pre-revenue or little revenue, and they're going to grow like 200-300% every year for the next like 5 years. And what's interesting is that nowadays everybody keeps calling it a bubble, but like these companies are actually making money. Like there actually are real sales, there actually are real earnings, and they are growing. It's just that what everybody's afraid of, I think, is at some point you can't just keep spending capex into the future like this. You can't keep spending $100 billion, $200 billion every year in perpetuity. Like you can't do that. So at what point do things start slowing down? And as soon as things start slowing down, that's when we have a problem. But it doesn't seem like that slowing down is going to be happening anytime soon. But people are already nervous about it. I mean, that's why you have Micron trading at like 7 times earnings, I think. Like set, but the stock is up like what 2,000% in the last like year or something. Um, so it's really interesting, and me speaking for myself, again, I don't have an edge. I'm not going to go chase things that end up being the last person out the door. Like thanks, but no thanks. I'll stick to what I know, and I'll be patient, and I'll be okay with that.
makes sense. So how's the move been to Beehive? I mean, you moved your publication almost the same time as me, I guess.
Yeah,
September, October last year. We spoke at the time. So
yeah,
how's it been so far?
yeah. So I mean, Substack was great. I'll probably say like maybe just say why I moved from Substack. So Substack was great in the beginning. Um, I have like no hate for it at all. It wasn't for what I wanted. Because like I mentioned before, I know you do different things too. So enlighten me with your strategy. You do a lot more stuff than I do. Um, but all I wanted to do was write. I didn't care about hosting live video. I didn't care about having my own Twitter within the Substack ecosystem. I didn't care about um, like just doing a bunch of things that Substack was pushing towards. Like all I wanted to do was just write an email and send it out. That's literally it. So when it was free, it was great, and that's what it was. But then eventually, when you go paid, Substack takes their fee of 10% off the top, and no matter how big you get, it's just 10%. And I'm sitting there, I'm like, okay, in the beginning, like if you're only making a few $1,000, like 10% is a couple $100. Like, okay. But then when you start getting bigger, you're like, man, I'm giving these guys like 5 figures worth of money just to host my emails. Like, give me a break. Um, so that was like one of the main things that, I didn't say pissed me off, but I just didn't feel right about it. And then what you and I talked about was like, they just kept pushing their app and making it so that you didn't even get people's emails anymore. You just got their name, which doesn't help me because what you and I have chatted about, if you can't even get their emails, then you can't even leave with them, right? Like you're kind of just stuck in their ecosystem, and the writing was on the wall. Aside from the 10%, the writing was on the wall that if you didn't leave soon, then you were going to consistently be ingrained in their ecosystem, and it'd just be harder to leave with anything valuable, besides your content, obviously. But, and I'm like, I do not want to be held by the balls. If I'm going to leave, I'd rather leave now. And again, I can grow slowly. I'm not in a race here, right? So that's actually why I moved to Beehive. And since Beehive, it's actually been like, hopefully Beehive doesn't go down the same route, but Beehive has been like pretty good so far. I mean, like again, all I need it for is just email, like and a website. That's all I use it for. So because it's not free off the bat, you still got to pay for it. But I've had pretty good experience so far. I would say that the recommendation feature that a lot of people benefit from on Substack is not remotely the same on Beehive. Like you actually have to like fight for uh, new subscribers, but at the same time, you have to decide what game you're playing. And my game is I want to have higher quality subscribers than a ton of low quality subscribers. But the platform
Exactly.
is good. It's interesting. I don't regret it at all. Um, the support team has been great, especially when you move over. And I have everybody's emails. So if I decide to leave to something else, maybe I'll join you over at Ghost eventually one day. I can take them with me, and I don't have to worry about that.
How's the growth of the free list? I'm curious, for selfish reasons.
Yeah,
Mine
the free
have
list.
grown about 5 to 10 per day, like free subscribers, which is a little bit on the low side. I think the conversion rate is about 2% of people visiting the website.
Got it. Yeah, I mean mine. I'll go through spurts where I don't get anybody. Um, but then again, I'll also go through spurts where like I'll just cut people because if they don't read my stuff, then
Yeah.
I'll help my open rate and call them. Um, but like someday, like I think it's really dependent on the post too. Because I think, wait, correct me if I'm wrong. Do you post like frequently, like on a regular cadence, or no?
I post every week, 2 times probably. So I
Oh,
have
okay, yeah. So you're often.
I
You're often.
I post very frequently, and part of the reason is I post free content, and the reason is I want that to show up on search engines. So
Mm,
that's the idea. And I also post like weekly free emails. But that said, it's a bit different for me because I don't run a fund. I do
yeah.
research for a living, so I serve people the best I can by writing constantly, more or less.
Yeah, I mean, I was that way too before launching the fund, but obviously when you launch a fund, you got to be a little bit more like careful with what you say and stuff. Um, but yeah, I chose not to do that because I didn't want to be held to, okay, Paul's email is going to come out every Sunday, 52 times a year, or like twice a week, once on Sunday and once on Wednesday or something like that. Because it's just a lot of pressure. I didn't want to do that.
Yeah.
Like my whole mantra was like, if I have an idea, I'm gonna take my time researching it, and I'll send it to you when it's done. Yeah, if you don't like that, then I'm not for you. But and that's why you attract like certain people, and your growth is just not as fast anymore because people want like oh, what's Michael's next thing? What's Michael's next thing? Okay, cool. What's the next deep dive, or what's the next free report, or whatever. Um,
Yeah, that's
so that's yeah.
it's a tough thing. I mean, people do things differently. I like to send out emails at the same time each week so that people know that they will should expect something. They get into a habit of reading something that you send out at the same time every week. At the same time, it
Yeah,
creates some pressure on myself, because I have to produce.
yeah. I mean, that's fair, right? Like, because I mean, correct me if I'm wrong. This is your full time job, right? Like, this is this
It's my
is this
full-time
is
job,
what you.
yeah, for 5 years.
Yeah. So yeah. So basically, like, I mean, awesome. That's congrats, because that's like what everybody wants. Um, so it's like, yeah. I mean, this is your job, right? So you're actually doing this like day in and day out, right? So um, um, being able to write consistently, I would say it's a little easier for you. Or I know like a lot of financial writers are like, yeah, I do this on the side, right? Like when I first started out, I had a full time job, and then after my full time job was done, I would then work on the research stuff. Like I would be working into the night or into the morning, and researching things and writing things and whatever. Um, but it's the regular cadence thing. I agree with you, is a very good way to get people to get familiar with you, get familiar with your content. Are, I would say, like maybe like excited, when they know like, oh, Michael's next post is going to be coming out in 2 days. Like we'll see what he has to say. Um, where mine is like, dude, I got too many other things going on. So if I if I send you something, believe me, it's worth it, and it'll come when it comes. It's a different mentality. Um,
Hope I
uh,
mean, mo- another thing though, I mean, if you do only send out emails when they're good enough, they're high quality, maybe you'll satisfy the readers better. They end up more satisfied with the product if you're just very careful with what you send out.
yeah, I mean that's okay. So that's a good point you're saying, because when you're writing, when I first started out, I was trying to figure out how can I grow my Substack, and there's always all these opinions that came online, this and that. And like the very top thing that came out as an answer was, it's best to find your niche or a niche and then exploit that. And they were like, Edwin Dorsey of Stockjabber only writes about short stuff, or red flags. And then they were like, Michael Fritzl writes about Asian equities and through Asian century
Stuff.
stocks.
Yeah.
Yeah, and then they'd be like, they kept naming like, find your niche. And I'm like, yeah, but like I don't have a niche. I just want to like write. Um, so the second thing that came up was like, have a weekly or have a cadence, right? Is it every week? Is it twice a week? Is it every month? Is it every day? This and that, blah blah blah. And I'm just sitting there, and I'm like, ugh, God, all this sounds ridiculous. All I want to do is just put words on a piece of paper, or on a digital piece of paper. And so the game that I ended up playing was like, I'm just gonna write for me, and if anybody wants to tag along, great. Where I know like you solely focus on Asian equities, which is great. I know you do dabble in a few other things, right? Like I read your post on utilizing Claude for equity research, which I thought was great. I'm like, damn, right, this is awesome. He just did the work that I was going to do, so great. And I know you do a few other things as well. Um, like Evan Dorsey, he does write red flags, but he also like writes that weekly email that's like the best tweets of the week that he found, or other short reports from other people, or recent resignations, stuff like that, right? So there's like some people who do like a component of something, and it works out really well for them. I have tried to do that in the past, but I just got bored so quickly, because I'm like, this is so stupid. Like I feel like I'm just sending you something just to send you something, and I wasn't proud of my work, so I stopped doing it.
I mean, I can tell you, like, of course, you've been writing as long as I have, pretty much. But I'm following hundreds of Substacks, and most of them write for 3 or 4 months and then they stop.
Yeah.
So I feel like people who hang in there, their lists keep growing and their subscriber base keeps growing. So that's the most important thing. So if your
Oh,
heart is not into it,
consistency.
Consistency is the key thing. So
Yeah, I mean, can I if I can ask you an honest question? If you had to go
sure.
back and redo it, would you solely pick Asian equities, or do you think you'd maybe add on to that, or maybe do something differently?
my my friend says I should rebrand it to Global Century Stocks and just do my thing. It's tricky. I do think that there is something to capturing a niche and being the first to mind when it comes to that niche. Like Edwin Dorsey, he did it beautifully. So there's something to that in terms of just pure marketing. At the same time, it's a little bit silly of me to focus on Thai stocks and Philippine stocks that nobody can invest in the first place. you know,
Oh yeah,
I
yeah.
happen to like those markets, but um, the vast majority of people they use interactive brokerage accounts or they use Chinese brokerage accounts, and they don't have access to these markets. Um, so I could have made it easier for myself. I think I probably would have a bigger publication had I only focused on interactive broker markets. So,
Interesting.
but
Okay.
at the same time, long term, I mean, eventually, you know, this niche is kind of my niche. I don't see many other people doing what I do. So perhaps there would have been more competition too if I only focused on Japanese equities or only Hong Kong.
Oh yeah, 'cause I know you definitely know of him. Who's that guy on Twitter who only focuses on like Japanese net nets or something like that?
There's one guy called Made in Japan, really
Him.
great
Yeah, made in
publication,
Japan.
growth stock.
Yep.
Yeah,
Well, I mean, hey,
he's about them.
maybe the next leg up for you is to add on,
I
European
I do
century
some
stocks.
Japanese stuff. That's honestly, I mean, that's one way to grow. You add more people, more analysts, and they cover different markets. But it's also tricky because subscriptions they grow very slowly. So
Yeah.
adding costs and hiring people, it's easier if you just have a few clients and they charge them 50,000 per year. You can easily get new contracts that way and just add an analyst. But if you're growing person by person, it takes years to build up a good subscriber base.
Yeah, that's
So
actually a good point that you brought up because we've talked about it before, and tacking on, the discussion with what game you're playing. I know that people struggle with, what's my newsletter worth? Like, what do I charge people? I don't know what to charge them. And the quick thing I'll say is that it's always easier to go up than down. So even if you have to start lower and then you learn the hard way if you didn't charge enough, then you just keep raising the price, which is what I did. And then the other thing too is, like you said, um, it's 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 a lot easier to have like a few people paying you a lot of money versus a lot of people paying you a little bit of money. Um, uh, just because that like helps with retention and your churn doesn't like explode and people like aren't messaging you like all the time like asking you dumb questions. So it actually helped me a lot when I like upped my price a lot because I'm like I only want to deal with like people who are serious, like no offense to the people who charge like $10 a month, but most of the time they don't stay around that long, or they just ask a lot of like questions that I just don't have the time to answer. Because like if you read my stuff, you would figure it out. But
how much do you
that's
charge
also
for
what's
that?
helped me. Yeah, so I
Yes.
charge $75 a month, which is 900 annualized, or I give you a discount of 50% off if you sign up for the year. So it's 450 for the year. And yeah, I mean, it's not like I say it's not nothing. It's definitely a lot for people. Uh, so that's why it obviously gravitates towards a more, I'd say, like affluent client or reader, I should say, because they probably have like the portfolio size to really make a trade worth it. And I tell people the same thing too. Like, out of all the stuff I write, if you just have if one of my ideas or one of my holdings that I write about works, it should pay off the entire year, like more than the entire year, just from one idea, right? The same thing goes for you, right? Maybe one of the deep dives that you cover could eat in someone like, wow, like, yeah, Michael had a really Like they had a really
You
compelling.
just need one idea. I mean,
Yeah, that's
yeah,
it. Yeah,
I don't
it works.
I don't necessarily sell it. I mean, sometimes I write about stocks that I don't necessarily, wouldn't buy myself. But it takes me a few days before I realize whether I want to buy the stock or not. So it's just basically research. I just provide the facts, and if I publish a report, it doesn't mean that I want you to buy it. I say that very clearly in the disclaimer.
Me too. Yeah.
Uh, but but yeah, sure. I mean, if you find just one idea out of those all the research that you produce over a year, that easily pays for the
Yeah,
for the
because
future stuff. And I think that's really
you
important to have, like, really solid information. There's just not much out there in the public sphere, at least not for my markets. So
yeah, because
I think
you
it's
do
it's a
deep dives,
yeah.
right?
I do, yeah. I do these PowerPoint presentations, and they're usually 40 to 60 slides.
Oh
Um,
wow.
lot of charts, and basically I try to cover all aspects of a business thoroughly to make sure that I cover all the bases, including, you know, like red flags and how management has behaved in the past and so on. So,
Yeah, no, because I know, like you said, like you don't tell people like, hey, you should go buy this, right? It's just like you lay out the facts from a company that you just think is interesting, and like you said, like even you take a few days to even decide if you even want to own it. But if it's compelling enough to somebody else, like maybe they'll do something, right? Because I think everybody would love to pay like $10 a month for a service for an idea that then makes them like 10, 20, $100,000 on on a return. But that's just not the case, right? So, uh, like when I was sharing my stuff, it was the stuff that I was just looking at, like, hey, I bought this, or hey, I didn't buy this, and here's why, or whatever. Um, why I'm long, why I'm
so,
short, whatever, whatever.
so your posts are more exploratory. Is that fair to
Yeah, well,
say?
especially now because I got to be careful with what I write now, just for compliance reasons. But before that, it was very much like, hey, I think this company is a short. I'm short this company, and here's why. And I would list up all the reasons why, and then you can, decide for yourself if it's compelling or not. Or I'd be like, hey, I think this company is actually worth a lot more because of X Y Z reasons, and then you would determine based on what I shared if you thought the same. Um, so it was very much what I was doing in my own process and in my own notebook, and I was just putting it on a digital page. That's literally all it was. So when I mentioned that I wanted to write whatever I wanted to write about, that's what I meant. Like I literally have a notebook where I handwrite things. I don't really like typing up my notes. Um, and then the newsletter ended up being the typed version of my written notes. Um, so that's what helped me, translate all my notes into a succinct like summary, of a few thousand words, sometimes more. And eventually people just like yourself, people were just like, yeah, oh, Michael actually writes well, or he covers interesting companies. In my case, it's Paul has good ideas, and then eventually, some of the people who read my stuff were like, hey, do you just want to like manage my money so I don't have to keep copying you every time? I was like, oh, okay.
Exactly.
Um, yeah, so then that's just how that happened.
Interesting. What do you think is something that people misunderstand about what you do? Do you get like,
In what sense?
are there
The
any
writing?
like pet peeves about readers getting annoyed or unsubscribing for the wrong reasons?
Oh, I
Like,
think one of the
perhaps they
biggest
have like
things.
the wrong expectations about what they get from the service.
Oh yeah, maybe. I mean, that's why like when they sign up, I make it very clear what the expectations are. Like I tell them like, listen, I am not your manager. I am not telling you to buy things. I'm not recommending things. There's no buy, sell, hold, whatever. I don't write things on a weekly basis. I don't write things this and that. All I say is that you're going to be getting I say you get 20 to 30 paid posts a year, and this is what I cover because that's where I invest my money, or that's where I invest the fund's money into. And if it's not for you, great. Then move on. But there are some people. You know what's interesting is I think I've told you this too. Uh, there are some people who were on one of the like original plans, and that was like $12 a month. And
Well,
yeah, I know, right? We've come a long way. And you know how on Substack when somebody unsubscribes, they list like the reason, or the reason why they're leaving, and some people would say, "Oh, it's the price." I'm like, for $12 a month, like you don't think my ideas are worth $12? Like, okay, man, like power to you then. Good luck. Um, and then there's other people who are just um, like I just they're like, oh, I was expecting more of a written cadence. I'm like, okay, that's fine. Like, sorry you didn't read what I told you it was going to be, but like I don't get angry at any of them. People will leave for a number of reasons, and more people will come, eventually. So it's just a matter of, like you said, as long as you consistently write and you consistently keep doing a good job, and you're consistently proud of the work that you put out, and you're not just putting out work for the sake of putting out work, then people will keep coming. And sometimes I've had people who have come. I've had people who have come just for a report like 5 or 6 times. They'll be like, they'll leave, they'll come, and then they'll leave. They'll come, and then they'll leave. And I'm like, dude, you should have just stayed. It would have been cheaper. Like, I don't even know what you're doing. Um, but okay, and
interesting. Yeah,
yeah, but
that
that's.
happens a
I don't
lot
know if you've
on
had something similar.
Substack. I On Substack, the churn used to be 50-60%. So a lot of people would subscribe for 1 month.
Whoa.
They would they would get out, and then they will look at the portfolio again the next year. Uh, so yeah, the model was maybe not working quite as it should have. Uh,
Well, because
and
YouTube
and
free
some people
trials
say you
too,
should
right?
only. I'm very like generous and try to lower friction as much as I can, but at the same time, there are some people who will abuse that. Uh,
Oh yeah, because I don't do
but
that.
that's okay. Yeah, it's okay. I feel like also people they do need to sample whatever you do first before they commit. So
I agree.
perhaps there's
Yeah.
too much of a hurdle if you ask for a full year's worth of subscription. Um, it's
Well,
I
it's
don't know.
funny. It's funny you mentioned that because you know him, Alex Morris of the Science of Hitting.
Yeah,
Yeah.
yeah.
So Alex and I talk about this stuff too, and it was funny that there was a I forget, like he and I were talking about something on Twitter, and I turned paid. When did I turn paid? In like May of 2024. That's when I started charging money for things, and we were just talking about something public on Twitter, and then it was funny because a guy commented, he's like, how do I even know you're worth it? All your stuff is paid, and I'm like, no, I've kept everything before May 2024 as free. Like if you want to, you can. There's 4 year or 3 years of free content that you can see as examples, right? And so I hate to say this, but there's just a lot of like dumb people out there who are just like quickly say things without researching anything, and like I said it in a very like passive aggressive way, like, oh, funny you say that because like I have 3 years of free stuff that you can look at. um, um,
I guess I
and
guess
it,
I guess there's a lot of yeah a lot of information everywhere, and people have perhaps difficulty separating different writers from each other. Um, you know, it's I guess it's hard for people to know exactly what you stand for and what you get.
but
Um,
that's that's
that's for
that's
sure.
the important part though. It's like you said it yourself. You write a number of free content because it helps out with your SEO. It might get people at least into your subscription list, so that maybe one day you'll write something new, and they'll be like, oh, you know what? This I'll pay for this one, right? So at least
Yeah.
they're in your ecosystem, which I think is very smart. I don't have the patience for that, but there are, like you talked about like expectations we were just talking about. Because I just remembered it. I remember when I turned on paid, I had to feel like I had to like validate being paid. So in 2024, I think I sent out like I don't know, like 60 or 70 paid posts, like just to make it worth it. And then in 2025, I like only wrote about like 7 new ideas, and um, on top of all the other paid posts, but 7 net new ideas. And I think there are some people who are like maybe annoyed that, oh my god, I paid this much money and I only had 7 ideas. And then and then I had to sit there and I'm like, yeah, I sent you 7 ideas, but like literally 3 of them are like a 2 or 3 bagger in the same year. So it's like, yeah, you got less, but you got higher quality. So like, pick what you want to fight about with me, because it just sounds like you're complaining. Um, but that's where the writing portion comes into, and that's where you're trying to get people who take you seriously, take your work seriously, and will compensate you fairly for it, as opposed to someone who's just in it to smash and grab and then move on.
I think people will see the value in what you do eventually. Once they see that you're right over again, they will take you more. I mean, they will take what you do more seriously, for sure. So
Well, what's interesting that I think you do very well with is, so what I think is one of the common misconceptions about research is that every piece of research that you send out, I think they believe that it has to be an actionable idea. Like there has to, like if you're sending it out, there's got to be something to do in it. When in reality, that's actually not how research works, right? Research is there to support different perspectives and decision making, right? So, what you do really well is you do deep dives, right? Granted, eventually they'll become stale because like maybe a company will change their strategy or like whatever, like quarters down the road or years down the road. But like if they want to get brought up to speed on something, they'd be like, yeah, like Mike was written like 20 different deep dives on 20 different companies. Like definitely read his stuff, right? Where
if you,
like I'll
yeah,
oh, yeah, go ahead.
no, I mean, I think this is the way to do it, and I think Alex Morris has a similar approach. Like learning about a huge number of companies, and eventually you will see opportunities when they present themselves. But it's hard to say exactly that this stock is worth buying, you know, uh, and do that 50 times a year or 25 times a year, and get them all right. High quality
That
companies at exactly the right
oh
time. That's just not going to happen. And
no, but
hopefully, in my own case, I'll buy them at a good time. But the research itself is separate. Uh, and by the way, I think people are used to reading sell side research, and sell side research, they sell the stock, like
yeah.
they're pitching the stock, and obviously because they want to make commission money. But I have zero incentive to sell anything, like to get you to buy stock. First of all, I'm not allowed to do that. Regulation doesn't allow me to pitch stocks. But second, I don't know why I would want that either. Like, you know,
Well, I mean,
like
I
telling
mean, you
people to
definitely
buy and
know.
sell.
Here in America, I mean, like there's a lot of people who've gotten in trouble because they're just like pumping a stock that they got paid for, to like write a post about or to write a Twitter thread about or whatever, and it ends up like making people lose money.
That,
But
that's the thing. That's the thing. Like, if someone is pushing a stock on Twitter, and you're not paying for a subscription, like you are the product most likely.
yeah,
So
yeah,
this,
um,
yeah, there's a reason to. I think it's a far better approach to avoid those self-promotional people or people who want to trade against you, and just go for the ones who are making money through subscriptions and who are serious, because you're going to get more unbiased information, and you're going to make better decisions yourself.
yeah, and that's the whole point of it, right? Because I think you said too, like you kind of mentioned it that if people pay for your service, or just your work, right? I shouldn't say service anymore because I don't offer like a service. I just, it's just my notes. Um, but they like expect you to like get everything right. It's like, dude, if I got everything right, believe me, I would not be so public with my stuff. I would raise capital privately and just be swimming in money because I don't make any mistakes. When the reality is like, yeah, your work, whether it's a deep dive or whether it's an actionable idea, you write it to the best that you possibly can with the information that you have, and you make a logical or educated um, guess with what you think is going to be happening into the future and the risk associated with that, and just sharing your confidence in whatever that is. But so many people get hung up on like, oh no, you were wrong on this or you were wrong on that. I'm like, yeah, honestly, yeah, I'm gonna be wrong. So if you think I'm perfect, man, you're talking to the wrong guy. So
Yeah,
that's another misconception
60%.
too about writing.
65%. Hopefully, that's what you're hoping for as a public market investor, right?
Oh
You
yeah,
can expect.
yeah.
Yeah.
Is that what was that again? Is that above average or is that average? I forget.
I think I've heard some people like Paul Tudor Jones perhaps saying that if you get 60% right, you're probably going to do pretty well as an investor.
Yeah, and that's
Uh,
Paul Tudor Jones, like the best macro trader like on earth. And he's also saying that.
it might have been from somebody else, but yeah, I mean, around there, you're not going to be correct 90% of the time, even if you did provide outright investment advice through your research service.
And that's the thing. It's like that's what people need to understand more of. It's paying for a different perspective, and and I'm not an or. I don't believe it's an or, but you tell me otherwise. And paying for a level of diligence that essentially saves them time on things, right? Like, granted, AI has helped out a lot, but AI isn't like perfect or even like really that great. Um, so like if you're doing a deep dive, I know you tweeted about this the other day. Like, you use AI to help you in your process, but you don't use AI to write for you, right? Um, so it's like, how can you then add value to people by writing something and allowing them to either get the perspective or to bring them up to speed in a way that is very easy to understand. They don't need to go back and forth between things. It basically brings them from 0 to 1, and then if they need to, they can start going from there, right? Like, people need to understand that research and financial writing is more than just actionable stuff. And I know I've said that before, but like I want to keep reiterating that because like if people don't understand that fully.
Yeah, that's a great note to end on. I suppose why don't you tell us about your research service? I want to call it Substack, but of course,
It's not. Yeah, 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 yeah. No,
you're not Substack anymore. Publications. Uh,
yeah, we gotta purge that name from our vocabulary.
yeah.
But no, yeah. So basically, what I write about, like I said, is what I invest in, and what I invest in is small and micro cap stocks. Like we're multi-strategy, so we're long buy. I say long bias because we technically do short, but we don't short that often. Um, so on the long side of the portfolio, I invest in small and micro cap stocks globally. It just happens to be mainly Canada and the U.S. So when I share my notes on the long side, that's where it'll be. If I short something, I short anything. There's no rules there. And we also invest in various special situations. So like I'll cover like merger arbitrage deals that are going on. I'll cover like IPOs. I'll cover post bankruptcies, stuff like that, where we either have capital in or potentially looking to deploy capital in. And I think that way, not only is it interesting to me because I'm trying to build a business off of that, but hopefully to other readers, it's value additive to them because they can get different flavors of things um, dependent on what they're looking for. But that's what I do. The writing is quite literally just an extension of what I I personally what I invest in for the fund.
So you get a live look into the process and the research, produced by a professional hedge fund manager.
Yeah. I mean,
Okay.
maybe be light on the professional professional side, but
No, no.
yeah, I guess technically speaking, yes.
Interesting. Cool. Well, thanks, Paul. And yeah, it was good to chat to you.
Yeah, you as well, Michael. Always great to chat with you, and hopefully we're able to shed some light on people for what financial writing is and what we're doing.
Cool. Thanks, man.
Yep.